Hey, it's John with Real Estate Prodigy here back with Tony Javier, and we're asking Tony today about financing deals. So Tony, when you're looking for a private investor or a bank or a hard money lender, what are you looking for?
Well, I'll kind of give you the different variations of how you can fund your deals up front, which is kind of what we're talking about, is funding your deals. So you have private lenders. Private lenders are typically individuals that lend at a lower interest rate than hard money lenders, but also at a higher interest rate than banks. The advantage of having a private lender is they are typically individuals. So right now we've got, I'd say, at least 10 private lenders that if we call them at any point in time, they can write a check and we can close on a deal in pretty much a couple days. So a private lender might be anywhere from 8% interest to 12% interest, whereas hard money lending, which is usually a financial institution, or it could be an individual as well, may charge points up front, whereas private lenders don't. So it may be 1 to 3 points up front, and points are basically percentages. So if you have a $100,000 loan and it's 1 point, that's a $1,000 fee up front, and then they charge anywhere from 10 to 15% on an annual basis for you to use their money. So those are the two types of funding that you can find to fund your deals up front, and then there's of course banks. The advantage of private lenders and hard money lenders compared to banks is you call a private lender, it's an individual, he'll write the check tomorrow. Hard money lenders, they have a little bit of an underwriting process, but typically they can still do it in a week to 2 weeks if you have a relationship with them. Any bank you talk to, unless it's a local bank you have a really good relationship with, it's probably going to be a good 3 to 4 weeks to close because they have to go to underwriting, they have to take it to their loan committee sometimes, and there's different hoops they have to jump through and get an appraisal as well. Private lenders don't require appraisals. Hard money lenders typically do, or at least an evaluation internally that they can say, this is what we think the property's worth. So I don't know if that answered your question.
It did, and it also inspired a lot of other questions. It sounds like with a bank and a hard money lender, they kind of already have their own processes in place, and a private lender, for that reason, might be a little bit more better for an investor to work with. Is there a process, if somebody hasn't been a private lender before, is there a process that you have to go through to help them to understand the transaction? Do you have to do basically some training for them?
No, we basically just brought on a new private lender. I think yesterday she dropped the check off to our office. She called off a referral and said, hey, we heard about your program, you pay good rates, it's secured by real estate, tell me more about it. I had one quick conversation with her and I said, my president Leon handles that part of it. I'm going to set you up with him. He sends an email, says, hey, here's our program, here's our noted mortgage is what we use for our properties, a mortgage to secure the loan on the property and the promissory note that shows the terms of the actual loan itself. She goes and looks at one of our properties. She was a referral from someone else. They trust us because we are a referral. And within a week, she wrote us a check to fund one of our properties. So the training for that individual was pretty much nothing. And she's in real estate. So she's a realtor that just moved into the area that had some money to invest. Very quick and easy. For one of my other investors that had over $1 million with us at one point, he was in real estate, but at the same time, he needed a little bit more hand-holding. He needed to know our processes more. He wanted to know more about our business because he had so much invested with us. So in that case, you're going to have to spend a lot more time with them and make them feel more comfortable. I have investors right now I can text message and say, hey, I need $100,000 on this property. Here's the address. And they say, where do I wire it to? Bam, they send the wire, and it's a done deal. And they're thousands of miles away in a different state. So it's all going to depend on how much knowledge they have up front of the real estate business, and many other factors on how much you're going to have to educate them. But typically, especially if you're newer into the business, it's probably going to take a little more time, because if they know that you haven't done any deals before, they're probably going to do their homework and want to see the properties, which is another factor too. There's some investors that want to see properties and some that don't. Private lenders, again, are usually individuals and don't need to see the properties, or may want to see the properties in the beginning just to kind of get a feel for you and see how your program works. Hard money lenders, they do have appraisers typically, or an evaluation system, or at least someone that goes in and inspects the property and evaluates it and says, hey, this is what it is. So hard money lenders are usually in the business of doing that, and they do it all the time, so you don't really need to educate them. Banks, they're in the business, so they just have to have a good feel for you and know that you know what you're doing in order for them to work with you. So.
Okay. And if you're thinking what I'm thinking while watching this, you probably want to see that email that Leon sends to the private lenders that they're bringing on board. We'll make sure that those of you who are Prodigy members are able to access that in the marketing content section of Real Estate Prodigy. Tony, when you bring on someone as a private lender, is that pretty much an indefinite process, or is it usually somebody who will invest with you for 2 or 3 years and then they're gone, or what's that life cycle like?
Well, we have 2 different types of investors right now. Actually, I'm sorry, 3. The most simple and the most common is someone that just invests per property. So we find a deal 123 Main Street, we send them an email that says, here's our after repair value, here's our purchase price, here's what repairs we're doing to the property. You know, I don't think we show profit, but they can calculate and have an idea how much profit we're making. So basically, it just shows them that they're investing 70% or less of what the property is going to be worth when we get done with it. So, I'm sorry, what was your question again?
The life cycle. How long will someone usually stay with you when they're a private investor?
So, when we send them those details, they invest in the property specifically, and we have a time frame. For us, we used to do 6-month terms, but we do a lot of rent-to-own properties, and sometimes we want to keep the money there longer. So we go ahead and do a 12-month term right now just to make sure we have enough time in case someone needs, 3 months, 6 months, or something like that to rent the property before they finance. That way we don't have to refinance and go back to a bank to get them cashed out and then have to pay extra fees and things of that nature. So that's the most typical. I would recommend doing a 12-month term just to be safe in case you run into hiccups. We typically cash our investors out within about 3 to 4 months. So we flip a property, we have it renovated within about 45 days, have it sold within 30, and have them cashed out within about 90 days. So always plan for the worst, but then always, of course, try and hope for the best that you're going to turn the property quickly. So that's the first type and most common type of investor we have. The second investor is someone that says, here's 100 grand, here's 200 grand, here's 300 grand, go do what you want with it, and we'll sign a note back over to us, and you can take the money and divide it between the properties that you need to. In that case, we can go anywhere from a 1-year term to a 3-year term. We just know at the end of that term that we need to make sure we have the cash in the bank to write that check, and we've cashed the properties out that we've used their money for, so that we can give them back their investment at that point in time. There's a third type of investor that we have that when we go into other markets that we kind of deal with a little bit. We don't do this in every market, but we may give them an interest rate up front for the money that they invest in the properties, but then they also get an upside of the actual properties themselves. So we'll give them a percentage of the properties for taking more risk in another market. I say more risk, it's not really that much more risk, but it's them investing in another market that maybe they don't know and that's a little bit newer to us. It's worked really well. We're getting our investors really good returns. So instead of them getting a 12% return, which is what we typically pay, they're getting a higher return. It could be 20, 40, 20, 30, 40, 50% by the time we're done with it, depending on if we went to the bank and financed part of it, how long we had the property, and things of that nature. So those are the 3 types of investing that we do with our investors, and depending on the actual program itself depends on how long we have the investor invest with us.
Okay. In those situations where you've set somebody up for a 12-month term, but the buyer isn't ready, or the buyer flakes out after 8 months, what happens in that situation?
So you're saying if we get to the point where we have the money for 6 months or 12 months and we get to the end of our period and we need to cash them out? Is that the question?
Exactly.
We do one of 2 or 3 things. One is we'll refinance the property. That's usually the most common. So the way we structure our deals are we pay cash or do private money up front to fund all of our deals. We barely ever have our own cash into the deals unless we do pay cash. So the investor will actually write the check for the purchase price plus the repairs on the property. So then we may have a $30,000 check that comes back to us that we go and in return put into the property. We fix all of our properties as if we're going to sell them, and then we do rent to own or for sale, or market them rent to own and for sale at the same time. If someone does a rent to own, and to answer your question, we get to the point where the 6-month term is coming up and we know the buyer needs additional time, then we'll go to the bank or just pay the property off with our own cash if we need to make sure that the investor gets their money back. Because we always say what we're going to do. We always do what we're going to say. So if we tell them we're going to pay them off in 6 months, we're going to pay them off in 6 months. If the deal's in the works and we know it's only going to be an extra 2 to 3 weeks, we may go to our investor and say, hey, here's the deal. Here's the situation. If you have a good relationship with them, just have them sign a 30-day extension on the loan, and they're probably willing to work with you. But if you know the buyer's a little bit flaky and you could have it longer, then I would go ahead and go to a bank and refinance it and get cashed out.
Okay.
Get them cashed out.
So we've covered a lot of ground here. Is there any other points that you'd like to touch on?
Just take care of your investors. You know, if you go in to a meeting with an investor and you are prepared and you give them you let them know that you know what you're talking about and know what you're doing, that goes a long way. I mean, like I said, I've had investors that I have one meeting with, and before you know it, we've got $1 million that they're investing with us. So you create that relationship up front. You make sure you do your due diligence. Make sure you know what you're presenting. Look at the paperwork that you're presenting to them, because if they have questions and you can't answer them, you're going to look pretty stupid and they're going to think you're trying to scam them. So just be very prepared. Know what you're talking about. Take care of your investors, because we've had investors that say, I want to invest $100,000 with you. We give them, check after check after check after check, and then all of a sudden they're like, well, let me give you another $100,000. Well, let me give you another, and all of a sudden they've got several $100,000 with us. Then they start telling their friends, and then it just keeps snowballing. But if you hurt that relationship with the investor, it hurts your reputation, because they're going to go tell people, and they're probably not going to want to invest with you again. So just, take care of your investors and do what's right, and they'll take care of you, and you can buy a lot of properties with them. Okay.
Were you able to do this right out the gate when you started all those years ago, or did you have to do a couple of properties before you were able to point to your results and start getting private investors?
First time I brought on a private investor, I'd only done 2 deals. Actually, I take that back. My dad was my private investor in my first 2 deals.
Okay.
But my outside private investor was actually kind of a friend. He knew what I was doing. He said, hey, I want to invest with you. And that's kind of what started the investing. I saw, wait, people want to see what I'm doing and want to invest with me. So after a couple deals, brought an investor on, and we've been using, private investors since then. I mean, I would guess we've used, close to $10 million in other people's money to buy properties. So.
All right. Some really great information there. Make sure to check out not only the emails and letters that we send out to private investors, but also some of the agreements and notes that we use. That will also be in the contracts and agreements section. Please give us some feedback. Let us know what you liked about this, what your favorite takeaway is. Leave a comment or shoot us a message.